Good morning, everyone. This is Marshall Giller bringing you the morning comment for October 21st. Well, the ECB confirmed that it had started buying covered bonds. It bought French and Spanish bonds, but yields of peripheral sovereigns rose nonetheless, including Spanish government bonds. That may be because the purchases were pretty small. The ECB's purchases also failed to encourage European stock markets, which were down across the board on weak earnings results. By contrast, stocks in the U.S. managed to recover on the day as the VIX index steadily declined and Fed funds rate expectations eased a bit in the long end. Now, despite the better performance of U.S. markets, the dollar weakened against most of its G10 counterparts. Dollar-yen fell the most, partly in reaction to Friday's rally and in part tracking the fall in Tokyo stocks. Prime Minister Abe was hit by the resignations of two female cabinet members after allegations of financial impropriety. These scandals may hurt Abe's public support, which is important as he nears the deadline for deciding whether to raise the consumption tax again, as scheduled. Gold rallied on hopes that demand will improve ahead of the Hindu Diwali festival on Wednesday and the start of the Indian wedding season. But in my view, hope isn't a trading plan. China's third quarter GDP rose slightly more than expected, and Aussie dollar shot up in response. Industrial production was also higher than expected, but fixed asset investment and retail sales were both a bit weaker than expected and below the previous month's figures. Still, it appears to me that China's economy is slowing, and the government's recent money market operations suggest targeted help to particular sectors rather than any general loosening of monetary conditions. The minutes from the recent Reserve Bank of Australia meeting repeated the usual phrase that the currency, quote, remained high by historical standards, particularly given recent declines in key commodity prices. Now, admittedly, Aussie dollar can remain divorced from commodity prices for sustained periods. I have a graph of this up on the website. Please take a look at it. So it's not necessarily going to send the currency plunging anytime soon. However, I still think the trend will be for Chinese growth to slow and for Aussie dollar to decline with it. As for today's indicators, there are no major indicators due to be released during the European day from either the Eurozone or the UK. In the US, existing home sales for September are expected to rise. If the forecast is met, it could strengthen the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.